Good morning. This is Rose Pelfrey. I'm Charlie Mosley. We're with Group Benefit Strategies, and we handling your benefits. I've had the pleasure and the privilege of dealing with CNT somewhere in the neighborhood of 30-some years, and this has always been one of the most progressive companies we've ever dealt with. I've said for years and years, you walk in the door here and you hear a nice little hum of people actually working. It's amazing. We're going to go over your benefits. Rose is going to go over the handout that you've got in front of you. You've got quite the list of benefits. I think you've got all the bases are covered here. You've got medical, you've got life, you've got dental, you've got vision, you've got disabilities. Everything pretty much that an employer can put on your plate is here. Now, we're in the Greenville location, and of course we got people seeing us on TV that are in North Carolina and Georgia and Tennessee, and we hope you like what you see. I think you've got some improvement in your benefits this year, and you're back with Blue Cross Blue Shield of South Carolina, which is the biggest network. It's the best national network. It's great in South Carolina, North Carolina, Georgia, and Tennessee. So any Blue Cross Blue Shield provider in the nation is in network for you. Rose is going to go over your booklet with you.
Good morning.
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 So on this front page, we have a highlight overview of all the benefits that are available to you as the employees. For your medical insurance, it's going to be with Blue Cross Blue Shield of South Carolina. Again, we're offering two plans, a dual option. We have the traditional plan that has co-pays built into it, and then we have the high deductible health plan. So you'll have a choice between those two plans. For anyone that's currently on the traditional plan with co-pays, this is your opportunity to now move over to the high deductible health plan. The company is going to pay 100% of the employee-only rate on the high deductible health plan. If you choose to go on to the PPO traditional plan, you'll be responsible for a $25 payment per month. And of course, you're also responsible for any dependent costs on the medical plans. The basic life, voluntary life, dental, vision, short-term and long-term disability coverage, all of those are being moved over to Kansas City Life for a June 1st effective date. This is going to be an open enrollment time, so now's the time to elect these benefits with no questions asked. And we'll go over those in a few moments. You also have, this is new for you, it's an employee assistance program. This is a benefit that provides some assistance to you if you're having some personal issues in your home life going on, whether it's financial, relationship, your parents, your children. And there is a flyer that's in the back that goes over the type of benefits that can be of help to you, or they can be of help to you. On the flip side, on the bottom left-hand corner is their website. So you can visit the website. There's a code you're going to need to log into their website. There's also a phone number if you would like to reach out to them and have a personal conversation. Again, it is confidential. It is a third-party vendor, and you'll be speaking with them and reaching out to them. And check it out, because you don't know when you're going to go into a crisis situation, but if you want to take a look at it to see what it offers, then when you're in that situation, you say, oh, I have this employee assistance program. Let me go see if that can be of help to me. All right, so we're going to flip over to this first page. You'll see the two plans side by side. On the left plan is the traditional plan. And as long as you stay in network, you've got a primary care physician visit. It's a $20 office visit copay. It's going to cover everything done in the doctor's office. A primary care physician is your family doctor, an internal medicine, internist, excuse me, a pediatrician, an OBGYN. All of those are considered a primary care physician. That's covered with a $20 copay. New on here is you're going to see the Blue Care on-demand visit feature. On the traditional plan, it has a $20 copay. If you're on the high deductible plan, you're going to pay $59. But basically, it's an app that you can download on your smartphone, set yourself up a username and password to get in, and you can visit a doctor over your phone. They'll have a list of doctors. You can pick which one you want. But you'll have the visit over the phone with, it's kind of like a FaceTime, talking to somebody. And you'll pay for your visit through your phone as well. There is a flyer in the back that gives you information on that, but if you want to take advantage of that, it's that same $20 copay. The specialist is a $40 copay. It's going to cover everything that's done in the doctor's office. And the next item is your preventive care. Of course, your annual physical is going to be covered at 100%. The Blue Cross follows all the guidelines from the government of what they say should be covered under your preventive care. There are some things that were excluded on the government's list. So Blue Cross has an extra $500 called a sustained health benefit rider, and it gives you extra monies in case something falls off that list. Some of the items that we're aware of that's not on the government's list is an EKG, chest x-ray, blood work, sometimes they want some additional blood work, and a urinalysis. So this is an extra $500 that would cover those type of things and more. On this plan, you have a benefit year deductible, and the benefit year is June 1st through May 31st of each year. It's a $2,000 per individual deductible. If you have family coverage, it's a maximum of 3 deductibles per family. Once you satisfy the deductible, the insurance pays 60% and you're responsible for 40%. You do have an out-of-pocket each year. If you have single coverage, it's $5,000. That $5,000 limit, your co-pays, your deductible, your co-insurance, all of those are feeding into an out-of-pocket limit of $5,000. If during the year you hit that limit, then the insurance will pay 100% for the rest of the year. When you go to the emergency room, it's a high dollar place to go to, so you will have to satisfy that deductible. But if it's not a true emergency, you might want to look at going to an urgent care place. Everybody has them locally around here, MD 360, Doctor's Care. Any urgent care facility is going to handle you with a $20 copay, okay? But if it's a true emergency, you definitely want to go to the emergency room. Everything done at the hospital, inpatient, outpatient, emergency room, that includes getting, an MRI, ultrasounds, all those type of things, are going to be subject to your yearly $2,000 deductible. If you have family members, it's a maximum of 3 deductibles per family, with no one family member needing more than a $2,000 limit, and a total of 2 out-of-pockets per family. One family member gets 100% at $5,000, but a combination thereof of the entire family at $10,000, you have 100% for the family. Out of network, you're going to have a higher deductible, higher co-insurance, and a higher out-of-pocket. So you want to make sure that you stay in network. Again, like Charlie said, Blue Cross has a very large network across the country. I think it's about the largest. Yes?
It is the largest.
Yeah, I think it is. For the prescription drugs, for generic Tier 1 prescriptions for a 1-month supply, it's an $8 copay. Tier 2 are your preferred brand with a $30 copay. Non-preferred brand is a $60 copay. And then your specialty drugs, which are typically medications that cost over $1,000 for a 1-month supply, they do have a higher copay. It's 10% up to a maximum of $200 for a 1-month supply. And if you're on maintenance prescriptions, you can take advantage of the mail order drug program. For generics, it's $16 copay for a 90-day supply. Preferred brand is $70, and non-preferred brand is $140. Any questions on this plan? Yes?
Just a simple one, because I'm a simple guy. Just a single guy looking at the high deductible plan.
And Charlie's getting ready to talk about that plan.
Okay, cool.
Okay. If you have questions, you might want to listen to him first, and then we'll take all questions at the end. All right?
All right, your high deductible plan, and those of you who have been in this meeting years past know I'm an advocate for that, and I do think it's the best thing that the government has ever given us in healthcare. They were trying to get you to be more conscious of money being spent. So therefore, they said, okay, you've got a lump sum of money that you had to go through as your deductible, but after that deductible is satisfied in this plan, your benefits are paid at 100%. The wonderful thing about a health savings account is that the money going into that account, and you can payroll deduct it here through Trent, is pre-tax, and the money coming out that you spend for medical care is income tax free. Usually when the government gives you a deduction going in, they tax it coming out. And that is not the case with the health savings account. I've called it for a number of years money laundering. And if you want to launder a little money and get a tax break, the health savings account is one of the best deals out there. You've got it, I believe it's with HSA Bank. You get a Visa, and once you get an explanation of benefits from Blue Cross, which shows you what your responsibility is, then you use that Visa to pay your bill. $3,500. When we first started doing this, I think the deductible was $1,500, and that was a number of years ago. $3,500 in the world that we live in right now is a relatively low deductible. Seems like a lot of money. It does seem, as long as I've been doing this, I thought I was out of business when employee rates went to $100 a month. I said, "Whew, man, nobody can do this stuff anymore." Now it's a whole different ballgame. But $3,500, it's $7,000 if you have a family. But in a family situation, usually if there's a high dollar claim, it's on one person. This stuff about 2 or 3 in a family and blah, blah, blah. Usually it is, unless it's a common accident or something like that, it is one person that has an event. I use myself as an example. I was on vacation, my spleen ruptured, I was in Mexico. Next thing I knew, it was a $500,000 claim. Had to be medevac, San Diego, etc. Under that plan, the entire responsibility is $3,500. And it's really a bargain. It coincides too with what the government, it's somewhat of an accident, I think, but in this year, $3,500 is the maximum you can put in your health savings account for 2019 for single coverage, and $7,000 is the maximum you can put in there for family coverage, which matches up with your deductible. If you're over 55, you can actually put an additional $1,000 in as what they call a catch-up. Now, do you still have a question? Did we get it? Good, good. The majority of you are in the high deductible plan. So, I mean, we've only speaking to a few people on the traditional product. You've got a lower out-of-pocket maximum in it. You've got the same preventive care benefits in there. Because the preventive is the only thing that's covered under your high deductible plan with no deductible. And we want you to have your preventive benefits. We want you to take good care of yourself. Any questions? Thank you.
Okay, we're going to move on. Of course, at the top of the next page is the health savings account. This is the time of year that if you want to change the election of how much is pre-tax out of your check, then you can let Trent know that you want to change that dollar amount. And for anyone moving over from the traditional plan over to the high deductible plan, then Trent has some paperwork for you to complete so that you can get set up with HSA Bank and start having some monies deposited into that account. On the life insurance coverage, in fact, all the rest of the benefits are going to be through Kansas City Life. The life insurance has not changed. It's $30,000. It's provided by the company. That would be paid to your beneficiary in case something happens to you. Has an additional $30,000 of accidental death and dismemberment. $30,000 is the benefit up until age 65. At that point, it reduces in benefits and has a schedule if you are older than age 65. It's important to make sure that you update your beneficiary on your enrollment form to make sure that we have the most recent information. Of course, if a claim is filed, that's what's going to be pulled out and used by your beneficiary to confirm that that was indeed who you elected to receive the benefits. On the voluntary dental coverage, this plan allows you to go in-network and out-of-network. They do have a provider list. If you want to go online and see which dentists are in network, you can go through their website and check that out. You're also protected by going out of network. The plan pays at the 90th benefit percentile, which means that the allowable charges should be set at what 9 out of 10 dentists charge in whatever area that you live in. So if you have any balance billing, it should be minimal. On this plan, it has a $50 deductible per family member, no more than 3 deductibles per family. The plan pays $1,000 per person per year, so once you hit that limit, the insurance is not going to pay any more towards your dental expenses. Of course, if you're on that high deductible plan that has the health savings account, you have some money in there that you want to use, that's a great place to use it on your dental coverage if you need to. Your class 1 is your preventive care. It's covered at 100% of the allowable charge. This includes your exams and cleanings and x-rays twice a year. Class 2 basic services are covered at 80% of the allowable charge after that once a year deductible. This will provide coverage for fillings, extractions, anesthesia. And then your class 3 benefits are major services, covers at 50% after the allowable charge, includes periodontics, which has to do with your gums, endodontics, which are root canals, crowns, bridges, inlays, onlays, dentures. The plan will only pay $1,000 in benefits per year, and then it starts over each year with a new maximum benefit. At the bottom is the voluntary vision coverage. I would try to stay in network because you're going to have a better benefit, and you can go to the website and look to see what those benefits are. Allows you to get an eye exam once a year. You can get your glasses every year as well. The lenses are covered once every year. The frames, you can get new frames once every 2 years. As long as you're staying in network, the eye exam is a $10 copay. And then your frames, you have a $130 allowance towards the frames. If you would like more expensive frames, you can. They'll just give you a 20% discount over the $130 limit. For the lenses, after your $25 copay, it's covered in full. Of course, you're going to be responsible for any enhancements that you may get with your lenses. And then contact lenses are covered up to $130, so you can take advantage of that benefit if you'd rather do that instead of the glasses. If you go out of network, which is just fine, you'll pay for the service, take your itemized receipt, attach it to a claim form, mail it into the company, and then the company allows reimbursements for whatever level benefit that you have, and you can see those listed on here. Any questions on the dental or vision?
I would suggest you go to the Kansas City network and look at who is in network for them. You notice there are $130 allowance for frames. In my opinion, most of the time, a vision plan is nice to have it, particularly if you wear glasses or have contacts, because but to me, it's more of a discount program than it is. Yeah, it's really hard to find frames for $130. You wouldn't think it would be, but when you get into the every time I've got 2 vision plans, and I still end up paying money out of pocket when you get glasses, but it's still better than not having it, and it's a very inexpensive benefit.
Okay, so we're moving on to the next page. Both of these benefits are very important. The voluntary long-term and short-term disability and the supplemental life. On the disability coverage, that's been with Reliance Standard for several years. And if you didn't elect it when you were first eligible, then you couldn't get it unless you went through and answered medical questions to get approved. This is a true open enrollment for both the short-term and the long-term disability coverage. So you can apply for this benefit now. If you wait until after this open enrollment, anytime in the future, you're going to have to go through and answer medical questions to get approved. Okay? On the short-term disability coverage, after a 14-day waiting period, coverage starts on the 15th day. This benefit is paid weekly. It'll cover 60% of your weekly earnings up to a maximum of $1,500. That's the maximum benefit, and it's paid weekly up to 11 weeks. If you elected the long-term disability coverage, then it will flow into the long-term disability benefit, which then starts paying you monthly instead of weekly. It's a 60% benefit of your covered monthly earnings up to a maximum of $6,000 per month. It has a 90-day elimination period, you'll see that, but that dovetails with the short term if you elected the short term as well. This is coverage that this is a benefit that can give you coverage all the way up until Social Security normal retirement age. You can elect the short term only or the long term only, or you can elect them both. But I really want to stress this is an open enrollment time to elect either one of these benefits without any medical questions. If this is your first time coming onto this coverage, there is a pre-existing waiting period, and it's a 90-day waiting period. If you were to file a disability claim within the first 90 days of coverage, they're going to go back and look to see if you were seen or treated for this condition the previous 12 months. But after the 3-month waiting period, then it's fine. Any questions on the short-term, long-term?
So you would recommend both?
I would. If I was looking at it, I would want to protect my income and have the ability to keep continuing paying my bills at home.
Yeah.
If I had to pick one over the other, I'd pick the long term over the short term, even though the short term is more probable than the long term, simply because if you have a stroke or something like that and it disables you for the duration, you got an income until your retirement age.
Charlie was mentioning earlier, we just saw a statistic yesterday that said for a 20-year-old right now, your chances are 1 in 4 people that you're going to have a disability that lasts at least a year before you turn Social Security normal retirement age. That's huge. It's kind of scary, isn't it? So 1 out of 4 people have that chance.
It's a higher probability than death, but in the long run, death is 100%.
All right, so down at the bottom is the voluntary supplemental life insurance coverage. So a lot of you have already elected this benefit with a previous company. Whatever dollar amounts that you have elected in voluntary life insurance are grandfathered and will transfer over to the new carrier. It's not automatic though in your enrollment form. If you previously had $200,000, that'll be grandfathered in and transferred over, but you will need to put on your form $200,000 benefit. The insurance carrier will look at the prior bill and can say, yes, this person had $200,000. But for everyone, it's an open enrollment time to elect this benefit. You can get $10,000 in $10,000 increments up to 5 times your annual earnings, up to a maximum of $300,000. They're going to guarantee issue a $130,000 benefit if you're under age 70. And so you can easily get $130,000 in coverage with no medical questions if you did not previously have it. You can also collect more than that, but you're just going to have to satisfy evidence of insurability by answering a statement of health form. It goes through underwriting. So for example, let's say you currently don't have the voluntary life insurance, but you want to elect $150,000. With $130,000 of it's guaranteed, so you're just going through underwriting for that extra $20,000 benefit. So you can elect, like I said, up to 5 times your earnings to a maximum of $300,000. Just anything over $130,000 will require a statement of health.
Rose, on the people that currently have more than $130,000, they are grandfathered into this plan, correct?
That is correct. And we have some people that have more than that amount currently. That will grandfather over. And if you want to keep that election, just write it on your form. And if you're not sure what you currently have, Trent has that information. I do as well. So you can inquire to find out what that is. If you want to have coverage for your spouse, it's available in $5,000 increments up to a maximum of $20,000. When you look at the rate sheet that's included in this handout, The spouse's coverage, their rate is going to be based on your age. So if your spouse is 35 and you're only 33, congratulations. It's going to be rated at your age of 33. For children, you have 4 choices. You can add your children, either $2,500, $5,000, $7,500, or $10,000. When you look at that rate covers all your eligible children. So it's not per child, it covers all the children, if you want to add that benefit. Any questions on voluntary life? All right, on the next page, it talks about qualifying events. Of course, this is an open enrollment right now. This is the time to elect coverage, add your spouse and or children. If you're not adding them now, during the year, if you get married, you have a child, your spouse loses coverage, those are all typical qualifying events. That gives you the opportunity to add them to your plan as long as you do that within 31 days. Okay. The 401k is not changing, so that benefit remains as is. On the bottom, you're going to see a benefits website. This is something that we create for you. The website is active right now, however, it has limited information. As we officially move over to Blue Cross and Kansas City Life, I will receive the coverage certificates, all the information. I will upload it into this website so that you can have access to it and review it. You can download it, look at it, but it will have all the benefits in the benefit website.
Also, you're changing care, this is effective June 1st. So if you've got a prescription that's out there and so forth, go get, that stuff cleaned up before the 1st of the month. So you're not in the midst of changing insurance and then having to get your prescription rewritten or handled by Blue Cross instead of United.
On the flip side, here are the rates. Some employees are paid monthly, some are paid bi-weekly, so we have the information, you can see it there, for the different tiers of coverage for the medical, dental, and the vision. At the bottom, it doesn't have the short-term and long-term or the life insurance because you're going to need to calculate that yourself based on your age, and that there are some worksheets behind here that allow you to do that. But at the bottom of this page has my contact information, my name, phone number, email address. I'm always available to you by phone or email. If you have any questions or any claims problems, please feel free to reach out to me directly. On this page, all forms are due by Monday. We have to get this paperwork submitted to the insurance carriers. If you're able to complete your form and get it into Trent today, he appreciates that, and you'll reward them, won't you?
Sure.
But of course, some of you need to take it home, speak to your spouse, or just review the information, that's fine. But Trent really does need the paperwork no later than Monday morning, so if you'll get that turned in to him, please. For anybody requiring an evidence of insurability form, that statement of health for requesting life insurance over the amounts, Trent has the paper forms. He can also email it to you, but that will be needed to request any amounts that are over the guaranteed issue limits. This page that's purple and pink, this is a worksheet for you to calculate how much your rate would be for the voluntary and short-term and long-term disability benefits. You just walk it through and it explains to you how to calculate that rate. If you have any questions, you can reach me or Trent to assist you in calculating that. On the flip side are the voluntary life rates if you're paid bi-weekly. The columns say per thousand, and it says 10,000, 50,000, 100,000, 130, which is that guaranteed issue amount, and 150. And you can elect over 150, but you can kind of, the quick math, let's say if you want a $300,000 benefit, you could look under the $150,000 column and just multiply it by 2. Or if you wanted 160,000, you would just add all 3 of those together. So I think I've given you enough options here that you can kind of create and calculate the benefit that you want and determine what that rate would be. A reminder that the spouse's rate is going to be based on your age as the employee, and then you'll see the dependent child at the bottom. All these rates automatically include the accidental death and dismemberment. That rate's been included into it. The flip side of that page is for those that are paid monthly, same thing. The next few pages talks about the preventive care, followed by a page that looks like this that has the pig on it. This is just another review of the sustained health benefit rider that's available on your medical insurance. In reference to that preventive care, of course, all the things that you saw on the previous pages are covered. But sometimes your doctor is filing for something, filing it as preventive, and it's not on that list. If that is the case, you do have an extra $500 benefit. If you have a claim that goes through and you don't think it's processed right, let me know and I will have it reviewed. Then you'll see the information on the health savings accounts and the limits that you can put in for 2019. This is a flyer about that virtual visit that you can do on your smartphone, called Blue Care On Demand. Gives you some examples of things that you'll see on here, like pink eye, ear infections, allergies, migraines. These are all typical things that you might easily use that app for. If you want to take advantage of that, I would download it now after you get the coverage, so it's there and available for you. So if you need to use it, you can just go right to it and click on it and move forward. Behind this page is the My Health Toolkit, information on that. This is a way to go to Blue Cross's website, create yourself a username and password. You can go in and look at your claims, your benefits, how much of your deductible you've met, how much would be out of pocket. You can look at the drugs to see if it's what the copay would be on the drugs. This also has an app on your smartphone. So if you go to the App Store, it's called My Health Toolkit. So those are two separate apps that you can download onto your phone. And then the last flyer is in reference to that employee assistance program. You'll see examples of things that are included under this employee assistance program: anger, anxiety, grief, stress, parenting, family problems, workplace issues. I like that one. But these are all great things. If you go to the website, there are resources on the website. Again, here's the website address and the code to get you in. There's resources on the website. And then also, if you need to speak with them, you can call the 1-800 number that's on there. Any questions? If you have some private questions, we'll be here for a few more minutes. If you want to come up, we'll be happy to answer any questions you have. I encourage you to get your form completed and get it to Trent today. Otherwise, you need to get it to them by Monday morning. Okay? Thank you.
Thank you.
Thank you. Brother.
One thing in here.